Right, good afternoon, everyone. My name's David Cowan. I'm the Managing Director of the Financial Services Forum, and welcome to our webinar this afternoon. This is the first in our autumn swing, if I can use that golfing phrase, for our whole schedule that's taking us through to December. So we've got as ever, we've got a busy next 40 to 50 minutes ahead of us. So what I would urge you to do is listen to our speakers, and we've got quite a lot to go through. We're going to mix slide presentations and discussion, and that I hope will prompt a lot of thoughts in your heads as we go through this. And what I would ask is if you can, while you listen, think about some questions, and we want to make this as interactive as possible. And so once you hear what people are saying, and it prompts some questions, please tap away, get them into us. It's all anonymous. No one will know who asked them. So you can ask anything you want, really, and we will endeavour to answer them once we've got through the first bit, which is presentations and discussion, as I said. So this afternoon, the subject matter is lessons, lockdown legacy, lessons for retail banking marketeers. So I've got to say, first up, actually, it's not just for retail banking marketeers, because we have got one of the leading lights from the marketing insurance world on the call. So we'll be expanding this out but banking will be our sort of starting point from this. We've got Fiona Blades, who's the Chief Experience Officer for Mesh Experience, and also the President. And Fiona's going to examine what worked in lockdown, or the first period of lockdown, and what didn't. As marketers, we're faced up to the imperative of re-engineering the customer experience in that fast-changing situation. So we want to know what banks got it right, and highlight emerging issues such as sometimes around things like fraud. And then we're going to consider the legacy of lockdown for retail banks. And our second speaker, I'm delighted to introduce Mark Evans, who's Managing Director of Marketing and Digital for Direct Line Group. So Mark was clearly leading probably one of the biggest financial services businesses in the UK, and was facing up to all the issues that the crisis imposed on someone who's leading a very large organization, or part of a very large organization. So there are our two speakers. So Mark, I think you're sitting comfortably in the home counties, and Fiona is not sitting in the home counties. Actually, Fiona is dialed in from Manhattan. So I'm sure Fiona will refer to that as we go through the session. So just to kick us off, before we come to you, Fiona, I just wanted to know, and Mark, I'll put this one to you, and it's a very open question, just to get the discussion going. But many people at the start of the pandemic, of the COVID pandemic, said they felt energized by the lockdown. And I know a number of business leaders have said that. And I just wanted to get your take really on how you felt at the start of the crisis.
So it's hard to answer that question without talking about some of the evolution. And actually, I saw a presentation from Britain Thinks the other day where they've done sort of word clouds capturing the sentiment of the nation. And I think it quite reflects my feelings as well. The beginning was sort of quite a curious, energizing, exciting time. We rushed out of the offices within 48 hours. It was a very binary thing to keep everyone safe. And I think that helped in driving employee engagement, but it was sort of kind of a bit weird and wonderful, wasn't it? Exciting, new. Then quickly-ish that turned into a bit frustrating, a bit reacclimatizing, adjusting, a bit confusing. And how long is this all going to last? And then a period of settlement, and so like the classic change curve. But I have to say, right now, with kids back at school and so on, it's a bit tiresome to see that this is going to be the way of working forever and a day, which it probably is. And just my yardstick on that is I went into the office last Friday, and don't get me wrong, it wasn't quite the fairy tale that it might have been, because the building's in a bit of a state, as they put thermal imaging stuff in and all that. But I do miss the magic of personal interaction. So I find it very productive. and I probably have better work-life balance than I've ever had, but actually missing a little bit of the human magic, such as it is.
Yeah, great. Well, we will develop, I'm sure, a lot of those themes. So, Fiona, you're going to take us through the first part of the presentation. So I'll hand over to you.
Brilliant. Thank you very much indeed, David. Let me pop the slides up and hopefully we can see these. Is that working for everybody? Okay.
Yep.
So let's start. I'll just move forward. I think we've got a couple here. So we've done this one. We're going to just have a look at the very early start, and we're going to look at that early period as everyone was urged to stay home. And in particular, where we were coming from with Mesh was we're not part of the NHS, we're not on the front line. So what could we do to respond? And we've been running a subscription study for retail banks for 3 years. So we decided that we could repurpose that data to provide a Friday roundup newsletter with slides and also a Monday briefing video to give banks the latest data to feed into their crisis meetings. And this was actually the first newsletter to go out at the end of March. Not surprisingly, we were seeing a big change in the way banks were being experienced with branches that were shut. And people were just reaching for the phones. They wanted to get onto the call centres, and of course the call centres were getting overloaded. Banks were in touch with their customers through things like emails and SMS, but we saw that care was needed in what was being said. And most dramatically, we saw that messaging that had been in tune 2 weeks earlier was literally out of tune by the end of March. And how are we actually collecting this data? So this data was being captured in real time after a short survey where participants provided their bank impressions. They reported on their experiences with banks through a mobile platform. And that could be anything from having an online banking experience to seeing a TV ad to something on social media. And they were telling us what the brand was, what the touch point was, how positive it was, how persuasive, how relevant. And in addition, they were providing us with photos and rich comments to tell us how they felt about the experience. Each participant was doing the survey for 1 week, although we had new participants coming into the study every single week. And then at the end of that 1 week, they were asked some of the same questions on brand consideration and image associations that we asked at the beginning. And that meant that we could then start to unpick exactly which activities and experiences were impacting on which brand metrics. So this is the first time where we were seeing both advertising and owned communications, so that could be things like emails, which had been considered relevant a couple of weeks ago, suddenly being reported as being irrelevant at the end of March. And things like pensions and jokes and those kind of things just weren't what people wanted to hear at that particular time. And the percentage of people reporting a branch experience, not surprisingly, which also I should say could simply be that they saw the branch, that they drove past it and saw it, or they walked past it. But that plummeted from around 20% of people having those experiences to 5%. But many more, so almost 20%, were reporting receiving emails from their banks. And whilst outdoor and cinema experiences were obviously dropping off, we actually saw that TV and radio experiences were being reported more in early May. And with the drop in those branch experiences, we were thinking, well, actually, what's this going to do to brand equity? Because we knew from previous analysis where we were using regression that if somebody had an owned experience, like a branch experience or an online banking app experience, that this had a particularly big impact on important brand metrics like brand consideration. And in fact, somebody who had an owned experience was 2.21 times more likely to maintain a high brand consideration, or 1.59 times more likely to increase from a lower to a higher brand consideration. And having a paid experience was also positively impacting on brand consideration, but it wasn't at the same level. So we were really interested to see what was going to happen overall to brand equity. So at this stage, this is just the early learning. So those first few weeks, what we were seeing was keep in touch with customers because they were craving information. Ensure weekly reporting in terms of your data because you needed that ability to pivot fast. And what was working today just literally might not be working tomorrow. At the start of the crisis, people wanted to speak to other people. So it was the call centers or the digital solutions with real people that people were looking for. They were returning to home media like TV and radio. This might not be the same for every crisis, but in this instance where people were being asked to stay home, those particular channels were coming through. And the customer comms channels became really vital to ensure that clear messaging was getting through fast. And that's particularly with things like email and SMS. So I'm going to just come off the slides now, but that's where we were early on.
Okay, great. Thank you very much. So, Mark, from an insurance point of view, how did what you were seeing in the retail banking relate to what was happening in insurance? Was it a similar kind of experience, or how did you adjust your messaging? I think you might be on mute.
Can you hear me now?
Yep.
Yeah. Not quite sure what happened there, but yeah, I mean, lots and lots of commonalities. So, because similar issues, people really unsure how to navigate through. So we did an awful lot of navigational work, avoided the emails from the CEOs, which many companies did. Who'd have thought all these CEOs suddenly cared so much? We didn't do any of that. But we did do a lot of navigational comms because I think customers didn't really know what was going on. How was it best to get in contact with us? Obviously, the travel market extremely disrupted travel insurance, business interruption insurance also, and people weren't driving all of a sudden. So what does that mean for my premiums? So those are probably the three hotspots. But we and many other insurers put an awful lot of effort on the customer comms that Fiona's highlighted. For us, we did 116 web releases in the first few weeks, 15 million emails, just to make sure customers were aware of what it is we were trying to do. Because I think we had good intent, but of course that's useless unless the customer is actually aware of it. And so it was sort of crisis management of customer comms is how I could describe the first couple of weeks. And as an exec, I think that's we like many were properly in crisis management for weeks and weeks and weeks. Probably the most interesting thing in those early days was around motor insurance, in that all of a sudden people can't drive, and so why should I still be paying my premiums? And this is where different events unfolded. So you had, for example, Admiral at one extreme, who went out and immediately gave a flat refund for all their customers, and really stole a march. They moved very quickly. Very simple PR, and got a lot of credit for it. And that it's only ego speaking when I begrudgingly say that they did a pretty good job there. But at the same time, 25 quid is nothing for somebody paying thousands, and it's a lot more for somebody who's paying a couple of hundred. So we took a bit more time and went a bit more sophisticated and gave refunds through proportionate to mileage. So motor is probably the most interesting category, but then it's really all become around travel. And even now, there are existential questions that are vexing the regulator and insurers around where does travel insurance go. But I think nail on the head from Fiona in the first instance, the emphasis upon customer comms, because people were just confused. They may or may not have been touched by SARS in the past, but most people had never experienced anything like this at all, and were just generally worried and confused about what to do. So that's probably the key point.
What I'm doing the 150 podcasts, I think you said, or blogs. I mean, I get
changing our pages so that people could have the right information. We created a refunds form and then iterated it to improve it, very much in a spirit of agile. But basically making sure our websites were the most useful and easy to use stuff.
And Fiona, the RET research that you did, which quickly showed that what people's preferences were, what they were reacting positively to from an advertising message. Comms, I get, you can change quite quickly, but changing a kind of ad campaign is difficult, isn't it?
Yeah, I mean, it was so interesting what happened, and also this first aspect that you touched on, Mark, because we very quickly saw. I think it was Halifax and Lloyd's went out with full-page newspaper ads, basically question and answer. This is what we're here to do. People just wanted facts, so those were things that they could do quickly, and they went out quickly. I think some of the actual TV ads were pulled, quite rightly, because they just felt out of tune. Lloyd's was one of the quickest banks to go back in with the black horse and the foals, but they changed the end line. So I'm imagining they obviously must have had the footage before, but they just subtly changed the end line to indicate that they were there during a difficult time, and that people just really latched onto early on. So that was the first where we could really see people latching on. It didn't last that long though, because then there was new stuff that was coming in, and people wanted to understand how was the advertising specifically. Give me benefits of what's happening now. I need to know information. So whereas that was very much a branded ad, and it worked just at that moment, after people were craving more knowledge, it became less positively received.
I think, yeah, just to build on that, I think actually financial services showed up pretty well from an advertising communication in those early days on average, because some other sectors went very, very deep and in a non-differentiated way down there. You know, we're nice and cuddly and warm and relatable and all those good things. But now the diagnostics show that they were largely undifferentiated and often misattributed. I guess in financial services, it's a little bit easier in that a lot of our income is annuitized. So it's not an immediate profit crisis right now in this moment. So we haven't had to furlough any staff. And I think there's many others who could say the same. So you could sort of protect the marketing investment. But I was very much of a view, which Fiona's kind of said, which is that if you've got a big insight and you've got a good communication platform, don't chuck it in the bin. It's probably the worst thing you could possibly do, but do some sensible reappropriation. So for us in the very early days, We're On It was our new line. In fact, we'd only just relaunched 2 weeks before lockdown. You can make it up. In a way, quite lucky that we got the new campaign out the door before the shutters came down. But we just changed some of the narratives. We're on it to do the right thing was a very subtle play on our line. And obviously we had to completely change the media mix because outdoor and cinema just didn't exist at all. So a bit more towards traditional media, TV and radio. But I'm sort of impressed that financial services didn't bottle it and start going for sort of gushy, non-useful adverts in the extreme, or indeed sacrificing marketing spend and giving up on building brands. So I think we collectively showed up pretty well. There's exceptions, but pretty well showed up okay.
I'm guessing that some of the TV spots were quite good value as well over the last few months. So
wow, I mean that is undoubtedly true. That if some advertisers end up spending less this year, it's because there's been some great deals as opposed to down weighting on impact. I mean the bounty, expanded audiences at lower price. And you'll have seen the share prices of the media owners, particularly TV platforms, because that's just the reality. Demand fell through. Amongst the marketing community, when you talk to people in tourism and travel, and they had no choice. Whereas financial services did. They had no choice because it was sort of do or die to cut their advertising, and so demand for advertising in general was down significantly.
Yeah, well, it's far too early to ask the question of has it been a good crisis for financial services, but we might come back to that later. So we're going to go on to section 2, but just before we do that, one of the questions that I had was just about how relevant findings that you've got in your research, Fiona, to this crisis. How relevant is managing a crisis? Can you draw some? Do you think the way that concentrating on the comms and getting the messaging right and putting the customer first are transferable? And I'm assuming they are, but transferable into other crises that businesses may face.
I actually think that's absolutely true, that many of those things are transferable. And we were privileged enough actually to work with TSB when it had the IT glitch. And again, you could see that immediately we needed to, the advertising needed to be cut. You couldn't go out with that. You needed to increase communications in general. So I know they were opening branches on a Saturday and doing as much as they possibly could to communicate quickly with customers. And then, of course, when they did come back on air, it was not with heavy product advertising. It was more purpose-driven advertising that they were using before they could go back. So I think there's absolutely get out there quickly and communicate. Use your customer communication channels to do that. Use press advertising if you have to also get out to customers quickly. And I think the only thing that was different this time was that sense of staying at home. So that was new for everybody. And that was why, in particular, the media channels that were being used were being more receptive. So that was the bit that was different. But then again, we might all be in a similar position. Again, we don't know if there's going to be a second wave. And that will be interesting to think about what we've learned the first time. I don't think it will be as acute in communication terms as it was initially. But still, we need to be aware of that. Okay, great. I was going to urge everyone to ask some questions, but we have got a questions, which I think we'll just take now, Fiona, before we're coming back to section 2. And the question is, in your opinion, is it better to communicate with customers as soon as possible with updates, brackets with the risk of bombarding them with emails, comms, or to pause and assess the importance of the message before communicating? Well, I've got a view on that. So the first one not to do is just go, "Hi, so sorry, we're here, we're with you." I mean, don't bombard people's emails with things which are just like nice like that. Make sure that you've got something specific to say. So anything that was really appreciated. Things like, don't try and call the call center between this and this time because it might be better. Or we've got a dedicated phone line for the over 70s. Things that were very specific were really. I think we've lost some audio from you. I've been. Oh, that's it. I'm muted again now. So sorry. Yes, so I think that make sure that the communication is relevant, but I would try and go out quickly and say something. So I do know that when there were banks going out saying we're going to help with mortgages, other people were going, well, it's my bank, because I haven't seen that communication yet. So it was really important to be up to speed and communicating quickly with customers. Okay, great. Thank you. Right. Well, we better, in the interest of time, crack on. But thank you very much for that question. And please keep them coming. So now we move on to section 2. And this is a few more slides from Fiona. And this is entitled, "What Happened During the Pandemic?" So back to you, Fiona. Thank you. Let's get these slides back up. And hopefully you can see those. Okay, well, I think the good news is that banks did respond well to the pandemic. We actually added some questions to our retail banking study, and this one showed that around 2/3 of people felt that banks were doing enough to help by mid-April. So that had already really increased from around 50-50 at the beginning of the pandemic. And what's more, the advertising in Q2 versus Q1 was impacting on brand metrics like fair, caring, and helpful. So it was building brand equity. The advertising was impacting slightly less on consideration, but that makes sense because banks were looking to reassure customers rather than to sell to them. And we expected to see, and we did see, an increase in the percentage of people reporting online banking and banking app experiences. However, what was interesting was that people were more likely to be reporting these as being very or fairly positive. And the reason for this was that there were very reassuring customer communications happening within the digital environment. And here you can see a couple of very positive comments that are coming through relating to Nationwide and to Santander. And so these were really appreciated. But the other thing we saw was that people were more engaged with the banking category overall. They were receptive to banking experiences. And in fact, if you look at the axes on these two charts, which are from Q1 and Q2, the average positivity of experiences went from 51% to 56%. And Barclays and Halifax in particular improved their experience quality. And overall, we saw that people's reactions to banking advertising was actually at an all-time high, with over 50% of the experiences being rated as positive. And the first phase, as we talked about a moment ago, was all about reassurance. And the press ads were working really well at this point. Then the banks were announcing what measures they were putting in place, what actions were being taken. And now we're much more in seeing the financial advice and the support that banks can offer as people are looking to manage their finances through the longer term recession. There were two styles of ads that were coming through during the pandemic. And actually, it was the ones which were featuring the staff and that were being action oriented and were very informative that were evoking the most positive responses. And as Mark mentioned, this is because what people wanted was they wanted clarity, and that was what was needed in this particular crisis. And here we can see how Halifax's advertising was working successfully in communicating exactly what the bank was doing to help customers. And you can see this comment here as to what people are picking out from the advertising. Nearly 60% of Barclays paid experiences were positive in Q2, and that was up considerably from a year ago. And again, this is seeing clips of workers at home. It was very relatable, this advertising, because it made people feel that the branch staff were in a very similar situation to themselves. They were in lockdown at home. So there was a lot of empathy that was coming through. And Halifax actually used a broad range of media in comparison with the other five banks, the other big banks. And this was actually at the time, which I think many of us might remember, when the effectiveness code was published by WOC. And this had analysis from the IPA effectiveness database, which showed that campaigns using a greater mix of channels, regardless of budget, perform better. And this was what we were seeing here. So what was the impact for banks with their advertising? Well, with less emphasis on product advertising and more on reassuring people through the pandemic, the bank advertising tended to have a bigger impact on maintaining people's brand consideration rather than improving it. And Barclays, Nationwide and NatWest did a particularly good job at maintaining brand consideration. However, we did see that Halifax, Lloyds and NatWest did a good job of improving brand consideration too. So overall, we saw a good performance here. But I'm just going to finish with this last piece of evidence, actually, before going on to the summary, because the investment that banks have made in the pandemic obviously doesn't come without a cost. And as banks announce their losses, this can actually be unnerving for customers to hear. So rather than simply letting the journalists provide their perspectives, I do think there's a role for banks to communicate directly with customers about the implications. So in summary, banks have responded well, and this is going to stand them in good stead. And in many ways, it feels a little bit as though the pandemic might finally have put the 2008 recession behind us. Those banks with heavy activity did build equity. and we could see Halifax, Barclays and NatWest coming through strongly. The positive response to advertising was at an all-time high, and people were really hungry for information. So this was a good time to advertise. The staff-oriented and action information that was coming through, this particular style really kept the human touch in the absence of branch experiences, and it did help people empathize with the bank. There was an acceleration of digital adoption, which I think we probably all expect, but what we did see was this increase in the positive response to these digital digital channels. And I think that that was very much due to some of the communications within those environments. And the aftermath of bank losses is obviously unnerving to people. So it is still a tricky road ahead. And I will stop now, I think. Come back.
Great, thank you. Yes, I was going to mention I invested in a bank about 3 months ago, calling the bottom of the market, and that share price has gone down 25% since then. So lesson to myself. So Mark, I'll come back to you again. What you've just seen in retail banking, is that an experience that's been reflected in your sector, in insurance?
Yeah, if you can you hear me? Okay.
Yep.
Yeah. I think there are some similarities for sure, and some differences, notable differences. So I mean, just a small point, but the sort of the staff-based advertising thing doesn't really work in insurance. I mean, obviously we've seen Gio Compario's living room to quite a high level of exposure in the last few weeks. But so the advertising construct hasn't really changed very much. But I think as I said, with good reason. Don't throw things in the bin for unnecessary reasons. But the two things which are very consistent. One is those that have really sort of stuck to their guns, continue to invest, continue to build the brands. We've seen solidity in their brand metrics. And during the course of lockdown, I was reminded that James Herman and Peter Field released a new paper called The Effectiveness Code, and it talked to creative commitment, which essentially says that the more you spend over a longer period of time across more channels, the more impact you'll have. I mean, it's a bit of a sort of, of course. But I think we've seen that, and generally insurance brands have sort of doubled down on developing their brands and been rewarded for that.
So that's similar. The other point, which is highly similar, is the drive towards digitization. At two levels, really. I think we've seen new cohorts coming in using apps and websites in a way that they've not done before, but also with greater sophistication. I heard a stat the other day that over 3 million people have had a digital consultation with their GP. And so if people are prepared to go and see their GP and try and figure out how to do repeat prescriptions, for example, digitally, then financial services is sort of in the same bucket of can be complex. I think we've seen more people embracing that. And so, for example, in the case of using digital channels for claims, we've seen a big surge in that, as well as purchase, as well as sort of more service-based transactions. So I think digitization, but also sophistication within digitization is the same. The last point's really interesting. So the impact on the sort of the viability and profitability of the company, I think it's a bit different for insurers. Those insurers that were heavy on travel, or business interruption, for example, Hiscox, I think it's been really, really tricky. For other insurers, it's been a little bit the other way around, which is that we can't make supernormal profits out of motor for the fact that people are driving less. That would be inappropriate. And so what I mean is that for insurance, there's been a blurring of brand and corporate comms in a way that I've not experienced before, and which requires a lot of internal cohesion, how to balance paying or not paying dividends with job losses and furlough and government support, with levels of profitability, with rebates to customers. And it's this sort of, really sort of congealed or convoluted problem of how to manage the messages, because investors are cognizant of rebates going back to customers. Customers are cognizant of dividends being paid and levels of profitability. So that half-one moment was almost sort of a show in terms of how companies are navigating through with its stakeholders, with investors, with boards, with customers. But for a slightly different reason, because you've got to balance those where it's acceptable in the eyes of one stakeholder what you do for another. So that's been a really fascinating learning through all of this.
I'm trying to remember the name of the company last week that announced a dividend, but at the same time had claimed quite a lot of money on furlough, which just seems
that doesn't wash, and I think that now gets outed in the media and in social media, and people remember that sort of stuff. And so for us, simply, we said we will not take any money from the government and we will not furlough anybody. Now, okay, easy for us maybe in insurance to be able to do that, but as soon as you start to blur those lines, I think you're much more at risk of being unpicked in these days.
Yeah, and just on the subject of trust, it's quite a big subject. Fiona, do you see any evidence that the pandemic has done for the trust of banks? And I guess that it also goes back to 2008. This is not a financial crisis; it's a health crisis, but it has financial crisis ramifications. So yeah, on that subject of trust, do you think have you got any evidence that on trust that the banks have managed to, kind of reclaim some of that long lost land?
I actually wanted to dive into this, David. So I've got a few extra pieces of evidence to look at on trust specifically. So we can see if somebody has any banking experience, what impact it has on their endorsement of trust in the methodology. And what we found was that if somebody had a banking experience during the pandemic, that was better at maintaining trust rather than improving trust. So what it did was it really helped those banks and those customers to feel that it was maintaining their trust. So it did that. NatWest had the biggest impact, actually. So that was interesting in terms of coming through. So if somebody had a NatWest banking experience, it was over 2 times as people were over twice as likely to be endorsing trust. So they were the winner on that. But whilst owned and paid media could maintain trust, so that could be coming through the customer comms, or it could be coming through the advertising. It was only paid media that could improve trust. So I thought that was quite interesting, that if you wanted to improve it, maybe you wanted to improve trust amongst prospects, then it was the paid media that was doing that. And in particular, it was newspaper, social media, and TV channels that were having the impact. So I would like to think that actually overall, the bigger picture that we've seen is that people did really feel that banks were doing what they could. And therefore, I would hope that we wouldn't be getting in the future what used to happen. For example, if somebody saw RBS sponsoring the rugby, they would go, oh no, and a whole load of stories would come out that didn't relate to the logo that somebody had seen on the shirt. So I'd hope that we've moved past that when we start to see the experiences and the way people pick them up. We have actually in the US, so Wells Fargo previously had lots of issues that they were dealing with, and many of the experiences that people were reporting now were much more positive. So maybe that's something that we'll see both sides of the Atlantic.
Yeah, maybe just to come in, David. I think there's a difference this time around in that the banks won't have been seen to have caused the recession that's actually going to follow. But in that, nobody really yet knows how the recession is going to play out. It's a bit early to declare victory on anything, because in many ways the worst is still yet to come. But a couple of things. I think the regulators had a pretty good process so far, the FCA specifically, in terms of, I know they've reoriented a lot of their staff to deal with COVID, and they've published, I think even today, maybe at the expense of the speed of some of the other initiatives, but hey, needs must. But for example, if I take insurance, ensuring there's consistency in terms of payment deferrals, ensuring that very quick product reviews are undertaken to ensure that we're giving fair value on all the different product lines. So I think actually the regulators played a pretty good game thus far. Specifically in terms of trust, I don't have the equivalent data for banking, but I think I think we have seen a bit of a kindness bubble in terms of customers being a bit more tolerant, recognizing that it may be harder to get through on phone channels, for example. But the interesting thing that we've seen, I think is interesting, is that we've seen record levels of Net Promoter Score in tandem with highest ever employee NPS, which we measure as well. And I think that there's a bit of a virtuous circle, that those businesses that have treated their employees well have then sort of inferred that in terms of showing up as best as they possibly can for customers. And then in conjunction with a bit of a kindness bubble, this is why we're seeing customer sentiment being quite positive for now. And the emphasis is probably on for now, because as more people roll off of furlough and unemployment no doubt rises, I think we'll see that kindness bubble disappearing quite quickly. But for now, in this moment, I think customers are fairly tolerant. The regulator's doing a pretty good thing. Companies are fairly robust and showing out quite well. But it's so early days for this crisis. Fiona's talked about a second spike. Even if there wasn't, the economic consequences are still completely unknown, and probably of a scale and quantum that it's going to cause a significant recession.
And do you think, I mean, customer behaviors seem to have changed, and you're digital transforming your business. So I can't see that changing or going back, but is there a risk, do you think, and it might be a very difficult question to ask, that has business behavior changed, do you think? Do you think the pandemic has changed fundamentally business behavior, or is this just, crisis comms, looking after the customer, and actually in 6 months' time, there's a danger that businesses just revert back to hit the normal button?
Okay, we'll both have something to say on that. Fiona, happy for you to go first if you like.
I think that business behavior will have changed, particularly in the service industry. The fact that we all had to go and work at home, and we've all adapted to that. And I think that some people who may have been worried about that have found that actually it has been productive. I think that's one thing. For me, what's been interesting is how to navigate the relationships, the business relationships in this new virtual world. Because normally, well, Mark and I were going to have a coffee back in March, I think, and of course we couldn't have a coffee, and it was after that then we were in email correspondence, and I was sending information over in terms of on the banking side, and those things are going to change. And I really feel that is important at an employee level, as you've mentioned, Mark. We've really benefited as a business because we're small but globally dispersed. So we're in 4 different locations, and actually we're now one global team, and it's so much easier to be together than it ever was. And we took the decision fairly early on that we would be remote during the whole of 2020, but that we would work together on what we wanted and whether we wanted to stay virtual for 2021. And I think where we're at the moment is that we will want to meet up, as you said, Mark. There's a real need for that human interaction. We want that, but that doesn't need to be every single day. And therefore, we will need different work environments, different routines that people are now getting themselves into. We're building different relationships through virtual channels when we would have been at conferences. I love the ones that you've been having in the past, David, and we would have had those. And those aren't available in the same way. So we're now learning how to build relationships in this new virtual world. That's not going to change.
Yeah, I agree. Before I say what I'm going to say, because it might sound a bit gushy, I don't believe humankind has had a wholesale epiphany. Things aren't going to be all perfect and brilliant in the future. But I do think there are a couple of things that have changed and will stay that way. One, what Fiona talked to really is talking about culture, corporate culture, which has a massive impact on people in a company and also customers. And I think the fact that you've got hardcore, investment banks now saying we're going to ditch our offices. I think it shows that there's going to be a permanence. I pity commercial real estate in London, frankly. I think that part is going to be permanent, and it does change culture. My perspective is it gives a bit more, it democratizes communication, builds a bit more tolerance, improves listening skills, and allows diversity to translate into inclusion, so that everybody does get their say. So I think that's a profound change. Is culture per se, not just for financial services, but more broadly. The other thing is that COVID has coincided with Black Lives Matter, and I think with another surge in the environment conversation, and whether that's good luck or circumstance or coincidence, but I think COVID has maybe made people in a bit more of a reflective space, which has been a good platform for these other concerns to be raised, and rightly so. Would Black Lives Matter have had such a strong platform if we'd have been going around the world in a normal way? And I think one of the questions out the gate was, well, so is it sort of sod the environment now? Now we've got to focus on recovery, and I think everyone's saying no, we've got to build back better. It's the two together. So I think there's more wholesome conversations happening, which I think is a profoundly good thing. And maybe an unexpected positive upside of COVID is that perhaps an acceleration of some of those things. And if I take our Exco and our board, we're having conversations on the environment I couldn't have imagined a year ago, but it seems like it's a much more natural space to have that conversation than it was pre-COVID. I can't put my finger on exactly why. It's a sort of a little bit to an epiphany in humankind, but I don't want to get too carried away. But something has changed in the water.
Yeah, I think it's really interesting, isn't it? It's about people's attitude and behaviour towards financial services, and if the engagement can come through doing well by doing good, or being environmentally responsible, or being much more aware of what and evident, and FS business can evidence that they are actually taking all this seriously, and it's not just lip service. I think there's an opportunity for financial services to really build on an increased level of engagement that we're seeing from customers. Fiona, have you got any thoughts around that? Do you think people's attitudes towards their finances has been changed by being faced and continue to be faced, obviously, because as you said, Mark, we're nowhere near at the end of the road on this, but people are being forced to really consider their finances, but in a different type of context than what it was before.
Yes, I agree. I mean, I think that change anyway, as any marketer will look for those moments of change. When is the life stage change? When are those moments of change? And the whole world's gone through change. So I think that's something that really makes us all reevaluate and give pause for thought. I think what we're seeing with banking customers is that there are some that are better off, as well as some that are worse off. That's the other thing that's interesting. It's not just that everybody is feeling worse off. The majority of people, around 65%, are feeling about the same in the household finances, but you've got over 10% that are actually feeling better off. So banks need to be thinking about these customers, I think, in different ways, because somebody pre-pandemic on your CRM database is not the same person anymore. They may have gone through all kinds of issues. They may have known people that are sick. They may have been furloughed. They may feel better off. And you need to reevaluate who these customers are. These, and I can't really say post-pandemic, but the mid-pandemic or wherever we are, you've got to reevaluate who they are and what they want and what their needs are, and they will be different. And I think that customers know that their needs are different as well now. They may be not having commuting costs, but they might be having other costs that they're having to bear. So it is a time, I think, that everybody is really reevaluating finances, and there's a role there for banks to help.
Okay, great. Well, look, we're nearly out of time, but it'd be quite good just to finish with couple of positive thoughts, and it was really about, I think we might have touched on this earlier on, but just some maybe off FS, I don't know, but some silver linings from the pandemic. any thoughts on that from either of you to leave on a cheery note?
So I'll just hoover up the question as well. I don't know who it's from, but whether the pandemic has changed people's attitudes towards insurance. I think it's interesting. It's revealed that we live perhaps in a riskier world than we'd anticipated. I think the needs will change, and I think the whole industry is moving more towards a sort of pay-per-use type model, fragmentation and fractionalization. But in many ways, I think it's been revealed that perhaps we're in a riskier world than we thought. It's a bit of a generic answer, but to the point about silver linings, oh yeah, massively. I mean, if I think about, the average commute into London is over an hour, and it will be similar for other big cities as well. And in general, presenteeism was probably a characteristic of financial services, if not, the world. And I can say that my work content is now more interesting, but more relentless. And so it's a paradox, but I think I've never worked quite so hard, but never had such good work-life balance. And, so notwithstanding, I think virtual working is tougher for people earlier in their careers who don't have the networks and the accumulated CVs and the resilience that you build with time and age and all that. But I think the massive silver lining is around work-life balance. It can no longer be the case that the office is defined as somewhere that you travel for 1 to 2 hours to go and sit at a desk for 8 hours, or just for meetings. And I think that's mankind has gravitated towards meta cities for thousands of years. And who'd have thought? I think I will go into work 1 day a week on average max. And if somebody had told me that a year ago, I would have said that they were smoking something.
Yeah, that's very true. Well, not about smoking something, but going into work 1 day a week.
Speak for yourself, David, obviously,
So Fiona, last word before we wrap up. Well, we are wrapping up. So last word before we go.
First of all, I'd like to say a silver lining at the big level, I think, is something that Mark mentioned. Black Lives Matter, our ability now to perhaps be a little bit kinder and look at these issues. I think that's a big silver lining that has come as a result of the pandemic. And a small one for me is that I can be with my husband during the day, and I'm not always on a plane. And I just love those little things, like sharing little moments, that work-life balance. I think, like you, Mark, my day is extended because obviously I'm working at different times remotely. But it's in many ways it's better.
Yeah, great. Well, we know your day is extended because you dialed into the rehearsal call for us at 6 a.m. yesterday morning from New York. So great. Okay, well, thank you very much. We've sort of pretty much run out of time, but a fascinating discussion. Thank you very much, Fiona, for presenting your research and providing the basis for a stimulating conversation and getting Mark's views on that, and also Mark for delivering your thoughts and perspective from where you sit at the top table from insurance. So thank you both very much indeed. Thank you to everyone who dialed in and for the questions as well. This has been recorded, so we will very shortly put this up on the Financial Services Forum website, and you can find it. And here's some upcoming webinars that we've got over the next few weeks. We have got a full program of webinars. I mentioned at the beginning the autumn swing, and it's we've got a packed schedule going through to December. So for all of those, look at the Financial Services Forum website. So that's it for us from now. Fiona, enjoy the rest of your day. Everyone in the UK, enjoy your evening. And that's it. So thank you all very much, and bye-bye.
Thank you.
Thank you.
Bye.
Bye-bye.